Just after 3 p.m. here for the final hour session. Wrapped up my waterfall income masterclass. Had a good class for just the last hour or so. We are sitting at, let's go live price here. Live price at 67.55. Key levels for me that can make things pretty exciting would be in the final, I'd say the final 15 minutes of trading today. If we're between 55 and 60, that would be pretty sweet. If we're between 55, 60, 65, that'd be pretty sweet. That would be up to a $500 profit trap. So 67.60 is a $900 profit trap. It's 910, in fact. So that'd be very, very lucky. Maybe it works out. If we're below 67.40, it's a wash on the day. I'll still make another $5 or $10. That's our daily profit play from this morning that we were watching from literally 9:37 today. So this is where all the fun started this morning. We put in our trade, at the open. We're right back in the center. The market just ripped to the upside. It's pretty crazy couple of days of just intraday volatility. We didn't hit anywhere near our VIX box highs at 68.30 or so. That's likely not going to be the case. I'm hoping that we just see some oscillation between, current levels. Ideally, I'd like a chance to get a profit trap today. Making price get back below 67.40 and a winning daily profit play is totally fine. Totally fine. However, I would prefer if we are in the 55, 60, 65 zone coming into the late, let's say 15, 10, 5 minutes to go until the close. If we're in that sweet spot, that would be my best opportunity to actually win the day for a couple of bucks. Okay. So we'll see. I'll take this into the close and we'll have some fun with it. But let's see if we can win the day or at least break even, which considering the market, market maker move today was 45 points. We went from the open at 64. We're trading 90 points higher from the open. That's almost a double an expected movement. The ADR is 60. We went from low to high, 47 to 74. That is 130 points. That is, again, a double. So we doubled the average daily range. We doubled the market maker move. Now it's a question of where we're going to be for the close. And we'll find out in 45 minutes. Okay. I think you're a little late to that post there, AGB. Nikkei broke the highs like last year. What Nikkei chart are you looking at? You go back to the monthly. See if I can get some additional data here. Where's my Nikkei? I mean, we broke this back in 2024, man. This was the high from 1989, 1990. We started to flirt with the all-time highs back in 2024. Yeah. However, it was nice to be long as this was kind of making its way up here. So I did have some Nikkei exposure, COVID onwards, like getting some Nikkei in the portfolio, trying to gun for those all-time highs. We had a massive shakeout in 2024 with all that drama in the, Bank of Japan and some radical monetary policy. But ultimately we're going higher. So yeah, not a fun drawdown. That's for sure. This would be probably the worst situation for a US trader would be we peak and then 30 plus years later we make all-time highs. That would feel awful. You have an 82% drawdown over the course of 1990 to 2008. Can you imagine that, man? Being in a drawdown for 18 years before the bottom is in. I mean, traders in the US get impatient at like a 10% pullback, and the bottom has to come within 30 to 60 days. I mean, the crap that we have done in our markets here to thwart off like these bearish moves, we just refuse to have recessions anymore. So V bottoms, buy the dip. Eventually things roll over, and we'll see how bad it gets. It's just not happening yet. Okay, what's up, Scott? How are you, man? Hey, Donna. All right, Sam's here, Donna's here. We just wrapped up that masterclass. Let's keep an eye on the rest of the day. So I've got some iron fly defense in. That's a $142 in profit. I am down on my daily profit play about 275. So I'm trying to wash these trades or try to come out as a winner on the day if I can. So this one, max risk is 70. I don't know. This one might get lucky. We'll see. I'm just gonna let. I mean, I've got like some real low risk trade. These are the two that I'm focused on right here. This is the daily prop play from this morning. This is the defense trade. If those wash, then good stuff on today's session. Like I said, I'd like to see price stay between like 55, 60, and 65 because that would be a nice profit trap. But we will not know that until the final minutes. So we'll keep an eye on this stuff. All right. So watching this closely, I'll set a chart alarm to see if we take out maybe like 30, 67.30. If we take out 67.30, then I also have an iron fly here that might also give me some profit as well. So we'll see. When the days, I'll give you like the exact numbers, what my cash settlement is. There's daily profit play. There's a defense. I took a cheap fly. I did I'm not going to say over trading because they were cheap. This one cost me maximum $70. This one cost me 80. For me personally, I'm totally comfortable with that risk if I'm dead wrong, but I'm trying to throw some nets out there and see if we can, you know, come up with something at the end of the day. Yep. I'll be talking about it through the close, Randy. Okay. A lot of people unsubscribing from life. Yeah. I mean, well, there's one thing called grit. I mean, I guess you can always pack it in, but one of the weirdest things is just put one foot in front of the other and just face the day. One of the biggest testaments of character is adversity and responding to it. So it's not easy. If it was easy, everybody freaking do it. And markets are going to test you emotionally and financially, probably more so than anything else. So especially when you're losing, it's going to test you financially. When you're winning, it might just give you a false sense of confidence, like you can't do anything wrong. The market will teach you. It's like the lessons you will take away. You will get to know yourself as a person with a whole new dynamic as a trader, for better, for worse. So I'd say within reason, it's like, this is why I try to preach and mentor like such small trade sizes and just really tight risk management, because you can always survive and trade another day. What is crazy to me is like the all-ins. And I'll use the highlight this week. Remember, I talked about this morning in my live sessions. I mean, it was big news this week that Michael Barish closed down his Scion Capital Management. He closed down his fund. He deregistered. Now, granted, when you're under $100 million AUM, then you don't have to register with the SEC. I'm sure he's still looking after capital. I'm sure he's still managing money in some capacity. Maybe it's just personal. Maybe it's a family office thing. I don't know. But when, I mean, the guy's made some pretty bold calls in his day. He made a crap ton of money in 2008. You still got to respect the guy's process, and it's not like he's emotional. I think that he just does the math, thinks he's right, takes a position, and waits. And this market has really, the old saying is, markets can remain irrational longer than traders can remain solvent. And in some derivative of that, like, that's true. This market, for the lack of bearishness, it's like every time we've gone bearish, we V bottoms. You go back to, I'll go back to, I test a lot of option data back to like 2013. 2013 to now, we've seen 12 corrections of 20% or more. You go back to, let's go SPX. Let me get a new chart here. Okay, let's go to SPX. Okay, let's just talk corrections. So let's go great financial crisis. So here's our, dot-com bubble to the great financial crisis was essentially the lost decade, right? We crash, come down 50+%. So this high to low is around 50%. We get all the way up there. It takes us, 6 years to climb back up to all-time highs again. Yippee skippy, we've done it. Crash again. A lost decade. But if you trade, if you survive buying at lows, a 50% discount and buying things on sale gives you a 100% upside on just an index, let alone individual stocks if they survive, right? Same thing here. We're down 50 plus percent. The index alone doubles. And it took time, right? March '09 or so. It takes 4 years, but you can double your money in 6 years. You can double your money in 4 years, and then it gets ridiculous because all these little crazy dips and V bottoms, you buy the dip, rewarded, buy the dip, rewarded, buy the dip, rewarded, buy the dip, rewarded, even through COVID, even through 2022, even through 2025, you buy the dip, rewarded. It looks insane. Okay. But since the great financial crisis, we have put things in place that essentially backstop the market. It's financialized, it's gamified. Retail traders have grown a lot smarter the last couple of years. I still think that their time is coming where Wall Street wants to, put all the pain and, I don't know, bite their thumb at the retail crowd because they've been right a little bit. But retail is usually a terrible risk manager. Wall Street's a little bit better. Kind of. I say that and then just get bailed out. So anyway, we'll see. Shutdown end is bearish for indices. Is it though? Is it? Why? Why would the government coming back online be bearish for markets? If anything, you're getting back pay to tens of thousands of federal workers, and you're getting back into the 401k plans. You're forced buying back in the markets. You're getting back pay, so you're made whole for the last 40 to 45 days. People can spend again. That's not a terrible thing. I think what the market overreacted to this week was the fact that we've switched probabilities on the Fed Watch tool. I think that's probably the biggest change this week. Is now we have a 54% probability that the Fed is going to pause in December and not cut rates. And the market got a little over its skis and a little excited that it's like cut. And we're still looking to cut in 2026. Now, look, they can pause in December and go right ahead and cut in January. And the market's not going to know anything other than noise. This could all be noise, right? But a little ventilation at the top, a little pullback at the top makes sense. I mean, I just want you to think of this technically. Look at this run. From this low to this high. Look, I mean, you can go back any dip here. Okay, go to COVID. Even COVID hitting all-time highs, we had some pullbacks. We didn't even have this. Like this COVID low to this choppy zone was a 8 to 10% correction for a couple of months. We did not have this in 2025. This low, melt up. We're a little bit wonky here at the tops, but we were blowing through that 6150 level and never stopped until about 6920. That was our high, right? So if we are pushing this like weird seasonality where it's like the market just has to pause and get a freaking breath for 2 weeks or 4 weeks, like, okay, fine. Do I have some concerns with current prices? Yes, I have legitimate concerns, right? Looking at a monthly time frame, this is the first month that actually shows red. Does it mean that it's a bad thing? I mean, the month isn't over. Okay, let me ask you a question. What happens if the month closes like this? If the month looks like this, that is not a very good drawing. For some reason my drawing tool is hidden, but if it was a candle with a little tiny body like that at the top, so it's all wick and just a tiny little body at the top, it just as we have pullbacks, like the market gets all the way back up, is it enough to keep pushing higher into next month? Maybe, right? I'd be more concerned if we end up finishing with like a dark cloud. If the market by the end of the month is down here, right, taking out last month's low, it wouldn't necessarily be engulfing because we'd probably have to take out a couple of candles. But if we did a big fat red candle that was like mostly body, I'd say that's a dark cloud in the monthly. Like, does that mean there's follow through? Very possible, but I don't know. This time of year, it's pretty rare for the market to have a huge drop at the end of the year. There's forced buybacks. We're through the heat of earnings seasons. Everything's been pretty solid. Consensus-wise, we pretty much beat top and bottom on like 80+% of earnings this season. We're coming into holidays where, I mean, we're 2 weeks away from Thanksgiving. Thanksgiving and Christmas is kind of like a drift zone. We can drift sideways, We could drift sideways, I guess. We could pull back. We could have some crazy end of year volatility. I don't know. But there's a lot of wild and crazy stuff going on. So our job is to navigate it. As I put in here, trading indecision. Look, sideways is a direction. Sideways is a direction. We have to also understand that you can make money in bull markets, you can make money in bear markets, but traders know how to take profits in sideways markets. Okay? If you own stocks, sell calls. If you don't want to own stocks, sell puts and manage the stop loss, or be willing to own things at a cheaper price. But out of the money puts can do very well in a sideways market. Selling calls and lowering your cost basis can give you some premium and income. These all work in a sideways market. Obviously, income trades that I do every single day help as well. Okay. Rick says, should I put an exit order on the second? I'm not sure where you're at, man. So I'm down 175 on my daily profit play. I'm up 55, $80 on my defense trade. This one's up a little bit. This one's up a little bit. I could wash the day. That's down 180, up 30, up 80. I could wash the day for like a $70 loss. It's manageable. I'm gonna see. I'm gonna see if I can, kind of stick the landing with a big fat profit trap today. And I could regret it. It might be like, yeah, that was pointless. That was stupid. But I'm going to see what happens. We still have time. We got 30 minutes. This is where all the magic happens in the iron flies. At the end of the day, these final 30 minutes, these final 15, 10 minutes, if I'm anywhere near these profit traps, these start to pay out really well. So I'm going to ride this thing. And honestly, like I might let it cash settle, but if I've got like part of my butterfly trap, if my butterfly trap is filling up at the very, very end, and we're in like this area in the final few minutes, then I'll just try to close out one big fat winner and see if it's enough to wash away the rest. So it's one of those days where I'm just going to let it do its thing. If we close, here's one thing that's kind of nice. If we are back below this low at 32, I have a winner on daily profit play below 40. I also have another trap down here that's worth another $9 and change. So I think net on the day, I might get lucky enough to make some profit. But my weak spot is around 45. If we're between 45 and 50, like 67, 45, 67, 50, that window, I'm going to take basically full losses. $490 would be my loss. So if we're below 40, fine. If we're below 32 or coming back to retest this low at 30, like that's kind of sweet, because this one would be up to $500 profit, and there'd be a winner for $100 here. Enough to wash away the $90 of risk that I have here. So, if anything, this will be entertaining, right? But it's all managed risk. So I'm not that worried about it. If I'm dead wrong, I'll lose like $490 today. If I'm dead right, then maybe I get lucky with like a $500 winner today. Don't own any, and we think of where to sell puts. Yeah, follow the mechanics. And I'd like to do this on indexes. Doing like SPY puts or Q puts. If you're willing to, if you don't want to ever own the SPY, manage the stop losses. Here's an example. I did a trade today for my Project Options Edge. This is one of the services that I run. That's I'm not going to say it's more advanced. It's just typically I can kind of trade however I want to. This is like kind of my kitchen sink strategy, where I trade a lot of different ways. I'll put like whatever strategy I want. It's mostly income based. There's some campaign trades. We own some shares. We dollar cost average. So it's a variety of things. There's no like, one core strategy. Okay. But for Project Options Edge, the trade that I put on today is I bought a 500 put. I'll show you this trade right here. By the way, let me see if I can go to my save trades. Where the heck did they go? Positions, historical. Nope. Didn't I build this thing earlier? Save trades. This trade. This is the trade that we built out today. Okay, so this is into the close. Right now we're trading around 45. Okay, this is what it's going to look like at the end of the day. This is my daily profit play. This is my defense trade. And if we're in like I said, the sweet spot for me is between about 55 okay, between about 55 and 65, because this trade is offering $900 of profit. So if I can get, $400 to $500 in this trap in the next 27 minutes, something that gives me a break even on the day, we'll see. We're trading at 67.44. So I need like a 10-point push at the end of the day. I'm hoping the market makes a decision to either get down below 40, preferably to 35 or 30. That'd be awesome. Or push back up to 55 or 60. And I don't know what's going to happen, but if it's either of those scenarios, if we're watching this live and we either get a push back up into 55 or 60, or we fall below this level at 32, this would offer me a few $100. This one offers me probably the biggest profit trap right now. Doesn't really matter. It's just like hopefully one of those two scenarios happens. So I've got some profit up, I got some profit down. If it's somewhere in the middle, I didn't get lucky enough. Any meta spread management? No. What are you going to do, man? It's define risk. We got time. If meta comes back and tries to get a gap fill, meta's at 610. We have a 610 by 615. There's nothing to do on this trade. The defined risk is $240. If you don't like it, close it out for a small loss. I'm going to hold the trade to December. My max risk is $240. We've got the take profit already set at $3.40 to grab $100 and grab like 30 to 40% return. So if meta, again, if the market stabilizes and we see the broader markets lifting, Mag 7 might go along with it. Meta gets up to 620, 630, maybe enough to grab a profit. If it goes and meta freaking dumps off a cliff, I lose $240. There's nothing I need to do to manage the trade other than monitor it. Okay. So it's down. That's break even. Like, I'm not even worried about it. If you want to get out of the trade, you can make $10 and have no risk and sleep like a baby if it's making you that nervous. Otherwise, there's nothing to do. It's defined risk. I want meta to go back above 615 by expiration. I want meta to try to fill this gap, right? If this is a 618 and a pullback, we got filled in a great technical spot. If we come back up to, I don't know, let's try to even remotely try to get up and maybe fill this gap or try to work its way up into the gap fill. We're talking meta at 670. It's way above our 615 strike, so nothing to do. All right. Thoughts on IBIT? Yeah, let's take a look. So Bitcoin, not looking great, right? Now, I have said and I have warned that 90K is a very real number. Why? Look left on the chart, go with the trend line. This is support. This is support. It didn't quite hit it, but I was looking at this support level. All these moving averages here, here's going to be the critical thing for Bitcoin. Into the low 90s, which we're at 90, just under 95 right now. Low 90s, bouncing off this trend line. This is between about $90,000 and $87,000. Okay. If the bulls are going to step back in on Bitcoin, this is probably the time for them to do it to maintain the technical outlook. If we are down below 80, I have some concerns because now we're talking about maybe revisiting this resistance, becoming this support. Does it become this support? Are we putting in a giant freaking topping pattern? I have no idea. Okay. But if we are going to maintain some type of trend and channel, perhaps like this, right? If I just take this parallel, that's obviously not very good. But let me just make a parallel line. Let me just copy and paste this guy. So copy and paste. There. If that's all IBIT can do or Bitcoin can do is find some support, find some accumulation, the bulls would look a lot better if they're pushing price back onto the right side of the trend line and then allowing this area to stabilize and then making its way back up into channel highs. That to me is probably best case scenario on Bitcoin is we hold around 90K, maybe see some choppiness around here. But once this level holds, do we get back up to these highs by the end of the year? We'll find out. Okay, that's my thoughts on Bitcoin. So IBIT, same thing. It's just a layer of it. So I'm getting filled on some small dollar cost averaging levels, and it's fine. Like I have some hedges in. I've got a 45 put that. If it's dropping aggressively, I'm going to need it. It's going to help. It's going to help me lower my cost basis. And that's it. So I've got a lot of my IBIT trades have collars on, so I'm protecting the downside anyway. And I'm still looking to kind of own shares at a lower price. But where would I start? I would take this low and this low and we could fall somewhere between about $45 and maybe $48 and see if we could bounce. But like I said, to me, the spot price is Bitcoin here. Watch between like the 90 and like 87K zone. I don't really want to see price doing too much damage below that. Okay, because technically if this trend line is going to hold, this would be a pretty nice channel to say, hey, it's still bullish. We're holding this posture, stabilizing here. Stabilizing here. And then once we spend some time either bottoming out and supporting, getting on the right side of the trend line, we start another rally like we did here. Like stabilize, broke the trend line and rallied. So if we stabilize, break the trend line and rally, we can have this conversation unpleasantly at 95K, but a lot more enjoyment at the 130 to 135 if we get there. Okay. All right. 20 minutes to go. Come on, price. Do something fun to make us some money today. All right. Coming in. DPP. Reducing the loss. Defense trade up $50. Defense trade up $70. I mean, I need these two to give me. So this one's going to be trash. This one's down $80. That's my max risk. These two potentially have the big payouts today. This one is just trying to survive. So like I said, I'm taking this in the close. I'll give you the net result where cash settles. Hopefully I've got some money to show for it. But defined risk, it's not the end of the world if I lose, $450 or whatever, $490 today. That'd be like within a 5-point window. There's a 5-point window that I have like the most risk. So am I in that 5-point window? Because I don't think we're going back up to 75 today. If we're looking at this right now, I don't think we're going to go back up and make fresh highs where I'd also have risk. So either get down below 32 or get back to 55 or 60. That's kind of what I'm hoping for. My absolute dead zone is between 45 and 50. So either we put, and by the way, if you recall the market maker move this morning, we had about a plus or minus 45 in the day. So we opened up around 72. Okay. So if we came down to finish at like 10 or 15, that might be kind of crazy. Like it certainly, I mean, look, there's a lot that can happen here in 20 minutes. So if we come down and finish within, I'm going to do this exact number here. So we had a plus minus like 45, 66.72. So, oops. Dang it. 66.72 plus 45. So if we're at 67.17, the brokers or the market makers actually did their job and kept things within that market maker move. Now they let it get really loose today. I mean, price was up from the open 72 to 75. We'd let 100 points go today. That's a lot. So price is going to fall, and this actually might slip into my 25 zone here. I'm going to watch this one carefully. This one's now up $100. So this one is up a little bit. I'm going to try to hang. I don't know. I'm just going to hang in there. Max risk is 90. Max risk is 30. If we slide a little bit lower, we're at 38 right now. If I get into like the 30 zone, 25 zone, this one makes a big fat winner. All right. So I'm going to keep a close eye on this stuff. Below 40 is good. Yep. I see it. Bitcoin's never been this far from moving averages. It should bounce. Are you like, what are you talking about? Have you never been trading Bitcoin with a 70% pullback? Like we are barely away from these moving averages. There's nothing extreme about a Bitcoin chart whatsoever. Okay. You talk about ridiculous bull markets crashing back down, bull markets crashing back down, bear markets that lasted from 2021 into the bottom of 2023. Yeah. Time away from the moving averages, but we're nowhere extreme at all. So I don't know what you're talking about. We're right in line. Like this is just, I don't know. It's just structure. If we're going to hold, I see a channel. If we bounce, there's support in here. I hope it holds. If it does technical damage to it, then we have to come up with a new narrative. All right. So yeah, if we get below 67.40, that'd be great. We're at 38 right now, watching this closely. we're a winner below 40. Ideally, I'd love to see a winner below 35 or 30. That'd be a nice kind of you know stacked winner because I could win my daily profit play and a defense trade, and I can let one slip. I mean, right now, and here is one thing I could do. I'm up now. It depends on if I can get filled or not. It might be tricky because it's last 17 minutes prices are jumping around. I might not get filled the way I want. This is down 110, 100 bucks. Let's say 100 bucks. This one's up 80. This one's up 20. I mean, I could kind of wash the trade for the day. Okay. But by the time I'm sitting here fumbling around with 5 and 10 cent increments on my closing trade, this might slip and I still end up, taking a small loss on the day when it's all said and done. Bitcoin's from the 200 EMA compared to the last 5 times, it dumped really hard. So, at the 200, sideways. At the 200, support. Below the 200, yeah, it dumped. I mean, are we about to go into a bear market like we did here for 2 years? I think that Bitcoin from 2022 to current has changed quite a bit. I mean, I think it's more institutionalized. Um, it's more mainstream. I think there's bigger money into it, and you got BlackRocks and some other things. You got all the crazy derivatives. I don't know. I mean, I can't think that everyone that made their money in Bitcoin is like completely satisfied forever. That's like, well, I'm going to throw it in. I'm never going to make money in Bitcoin again. You know, I just think we have to ride this thing out. I think what was crazy was hearing people say that Bitcoin's not as volatile anymore, and it's no different than the S&P or the Nasdaq. And it's like you are smoking crack because Bitcoin is still a complete representation of risk on and risk off. So yes, the Nasdaq has been lagging and Bitcoin has been going down. It's obviously a tech related play. It's a risk on or risk off related play. This is a risk off move right now. So I think what is annoying was what happened here with the financial engineering of MicroStrategy, which is now getting its absolute ass kicked down to $200 from highs at $547. Like that's probably what bothers me the most. Is everyone thought Michael Saylor looks like a genius, but I don't even know where his break even is. MicroStrategy, it's like I almost wonder if this is like the pain trade that it's like, look, let's put Michael Saylor and let's see how comfortable he can get in by putting whatever he has in his company with like some of the biggest stakes in Bitcoin. Maybe they're trying to drive that guy out of the market. I have no idea. It's like the market will always do stuff like that. We're just trying to drive to pain points, right? All right. So we'll see. Look, it's a wait and see. If the markets can stabilize, if we go, S&P stabilizing here at these highs. So we have, this October 10th slide. Let's say that we kind of stabilize in here, or even if we have like a little correction's totally fine. It's not going to be fun because everyone's like, we're the bulls. It's going to be bearish. Watch out below the bubbles here. But if it just corrects 5 or 10%, it's okay. Because do we go higher, right? I'm way more concerned if we roll over and it does it violently. Like this is where I'm saying I'm going to call some potential like risk off trading. If this structure is breaking, okay, if this structure is breaking and it's not just like a break and close back above, that doesn't count. I'm talking about like a severe dip and a close below all of this, that if we had a rally back into the backside of the trend line, that is my concern. Because that rally could be the dead cat bounce that sets everyone up for the bigger unwind. And that's where traders are going to get absolutely killed. It's not the first. It's that we get that rally and everyone thinks like, that's the bottom. In this rally, if it's dead cat bounce, that next leg is where everyone feels the pain. But everyone that's stuck on the wrong side of this move, typically you see market makers and hedge funds and order flows will kind of get us back into equilibrium. And that's where the market falls. Okay. And it could be something along those lines. It could also work its way all the way back up to these freaking all-time highs again and then roll over on the backside of the trend line. It is price action. Okay. So we'll watch. All right. We're down to the final 12 minutes here. I've got $60, $70 here. I've got 112. Come on, we're at 37. I mean, this either gets really good. This trade gets really good. I mean, the smart thing right now is probably just to close up shop and, for better or worse, maybe have a break even or a small loss on the day. I'm not bearish. I'm saying that's the price action that would make me second guess this bull run. If we do some violent damage to the downside, then I think we're doing structure damage to this bull market. I'm not bearish. I'm saying that if we take out all these lows and we sweep these levels, the bulls might spend time climbing back. But, to me, the bigger rally is like if we find this past resistance, there's a big rally potential there. So we could fall all the way down to it and still be bullish. But if we do some aggressive damage, it's like this market might have like a, 1, 2, 3 wave move. So it's, I'm not bearish, dude. I'm going to trade whatever the market throws at me to try to make some money. All right. Close defense trade at 850. Okay, good. All right. This iron fly is looking better. I'm up 1.7. I mean, now I've got net profit on the day. We're in the final 10 minutes here. We're at 31. So I'm up a break even on daily profit play, 197 here. Like, I think this is probably smart for me to take some profit. Let me see if I can get a DPP for profit today. So I'm going to go, I got filled for $1. I'm going to try 90 cents. This is the issue is we might have like very limited. Let me try 95. Again, it should fill, but trying to go for break even. Not filling. I'm going to cancel it right now. I'm just going to ride this crap out. This iron fly, I'm up 205, 217. We're at 29 right now. Don't freaking bounce. All right, let me see if I can close this one down. 7 dot. Ooh, baby. $7. There's a lot of jumping around here. Come on, you. And this is what happens. The last like 10, 15 minutes, it's magic, but it's also chaos. All right. Don't pin at 40. 40 is not good. Let me see if I can grab. That was a quick $200 that slips. This one is still showing some small risk. We're below 40. Come on. 170. I took this in for 930. Let me see if I can get $200 out of this trade. 730. Come on, Bears. Damn it. All right. This might just have to be like wait and see how it closes because it's going to be tough to manage all those positions and get the fills that I want. What happens to the fly of daily profit plays under the fly would be worthless, but the daily profit play be a full winner. That's how I talked about this morning making $10 on the day. Okay. I'll hold off for right now. I'm still up a couple of bucks. 150. Come on. 8 minutes to go. I mean, this is pretty crunch time here. I don't want to see it at 67.40. 67.40 doesn't do me any good. That's too close to the daily profit lay line in the sands. My fly is not going to help much. All right, I'm going to try to close this thing down for 630. Actually, try something nuts. Let's go 530. So I'd still win daily profit play if we're down here below 40. Oops. 650. I'm going to go 530 for a $400 winner. If we push down to the sweet spot of 25, this might get pretty good. All right. Daily profit lay showing a small profit. This one's up $200. Let's go 730. That's up $200. Come on. It's just so close to 40. Got out at 90 gamer. Okay, good. I mean, right now, if I can get this one out, it's down $30. Let me see. Come on. The low was 20. I mean, that low at 29 would be so nice. I'm prepared for like a 45 to 50 close, and that's going to be my worst spot. That's my weakest spot. Just stay below 40. Manage something here. Maybe get a partial winner. But it's going to come. It's going to come fast and furious here in the next 5 or 6 minutes. So I've got to take profit on this one. I'm going to keep an eye on this one and maybe make an adjustment. More tension in the World Series. Yeah, I saw that crazy statistic. Do you see that like Moneyball reference? Where at one time in the game, like I don't know if it was like the final like couple of innings, but like the Blue Jays had like a 91% probability of winning the game, and they lost. So like statistically, they should have won the World Series, but didn't. That's crazy. All right, daily profit play is now up $50. I'm up 200. This is worth protecting. All right, let me see if I can get out of this one. Let me see if I can get 50. 50. Oh, damn it. Go down, dude. All right, I'll try to grab 50 here. This is the slippery one. It was up $200. Now it's 120, 130. Come on, don't stick at 40. Give me 50. All right, just got 45 on the daily profit play. All right, getting a bit more profit out of this fly here. I'm going to try 790. Filled at 750. All right, that's kind of fucking good. Sorry. That's pretty good. That's a net winner on the day. And we're in 4 minutes to go. This might get really good or really bad. That was a net winner. So 930 down to 750. That's a $180 winner and a $50 winner on daily profit play. $130. Okay. So 2 crazy days of watching like a hawk and still coming out net positive. Not easy, not fun. Then I'm just going to sit here and torture myself with watching more profit. So now that defense trade is down to, that's about $250 of profit now. Yeah, we'll see. This might get, I mean, it's only 3 minutes left, but this either gets really good or it quickly fades. So we're at 31. I mean, again, this might be one of those situations where it just has to be taken into the cash settle. I mean, I'm pretty happy with that fill, honestly. $180 in that one, I'll take it. What did I do? Oh, I did that wrong. I did so 180. So I did 930 down to 750 plus 50. No, that's right. $130 profit. All right, $130. That's not bad. Okay. Now that is trading for $5.80, $6. That's up $300. Okay. Wonder Vile, good. And if you're holding the daily profit play, you can still get the full buck. It's like we're down to 30 right now. I don't think in 2 minutes we're going up 10 points. So you can grab the full $1 out of the daily profit play today. So it's down to $6 right now, 625. Still up about $300, $350, $340. I'll do the math at the so cash settle. It's like I'm already out of the trade, but if I cash settle it, now it's 555, up three. It's almost $400. But we'll close here in about 2 minutes. 565. The sweet spot in this one was 67.25. Yeah, it's going to be a loss there, JR. That one's for 90 cents. That's a loss for 90. Larry says, hopefully get the full $1.45 in daily profit play. Good. Where were your call size? Your call sides, Larry. What strike do you need to be below? I mean, we're below 67.40, which is good. That's what we needed. This was the trade I talked about this morning. So we're below 40. So that daily profit play would be a nice full winner. And that, yeah, this is the crazy part about some of the fly stuff. It's like now it's down. I mean, that's up 400 and about $400. But it's slippery. You need 64, okay, 67, 40, 10 wide. All right, man. I mean, it's looking good. We got 1 minute. It's looking good. Let's see where cash settles. Settles at 33. I did the right thing. Managing the trade, I did the right thing. It's trading for that trade that I closed for $7.50 is now showing $9. So I would have made a little bit, and it would be about the same. So I would have made $100 on daily profit play, and that would have been a cash settled break even. That would have been break. I mean, I don't even know if it's break even. Technically, this is yeah, it's 80. What was the risk? I was risking $70, and this is the calculation is crazy. So $100 on daily profit play. You needed to go below 67.40, right? So everyone daily profit play, full winner. Okay. DPP, end of day, SPX less than 6740, full winner. I managed the DPP and fly for a net 130. Trading it live during the final hour YouTube session. Okay, the DPP, full winner. The Iron Fly defense, small loss. This combo was the net 10 cent talked about this morning. So it worked. Okay, nice. Rick said, instead of losing big, made $20 after commissions. Totally fine, man. Like I said, even a break-even day feels fine. What I was going to say is the cash settlement here. So I had a pin price of $67.25 with a $9.30 fill. Let me double check that. I think it was 30 or 20. $9.30. So I was only risking $70 on that trade. So 67.25. There's my break even. 67.34.3. Well, look where we settled. So I would have made $19. Okay. I would have made $19 if I let it cash settle, and I would have taken the full $100 on the daily profit play. So net, $119 versus I closed out with a $130. Worked out about the same. Certainly better than a wash on the day. Certainly better than losing on the day, and enough to keep us entertained. So that was it was a pretty wild way to finish the last couple of days. That's a lot of volatility, coming out of, I'm not going to say nowhere because the VIX obviously was elevated. So prices, all sorts of wild and crazy. But the market makers failed 2 days in a row. That's very unusual for them to do that. VIX is still above 20, but letting prices slip through market maker moves and letting it slip through market maker moves. I've said this before in daily profit, like gaps will do that. Gaps can make things very disruptive. A high VIX can make things very disruptive. We still find ways to, trade and win the day. So market makers did the job? No, they didn't. Okay, their job should have been to bring price back below 67.15. They didn't. Okay, so we opened here at 66.65. We had a plus or minus 45. They should have brought prices back to about 67.10 or 67.15 on the day because the VIX was up. So that might widen out our volatility expectations. But if the market makers did their job based on the open today, things would have been settling around 67.10. Okay. But to be fair, it's like, who knows what goes on behind the scenes? They could have used all of the risk from yesterday and rolled it into neutralizing it today. Because look at where the market finished. From the close yesterday to the close today, the market essentially did absolutely nothing. So we look at I looked at the market makers from they let it slip here from the day's perspective, they let it slip here. But from their eyes, they're in this trade. They're rolling risk from yesterday into today. So what do they do today? They defended the crap out of this, right? Because what they do is they gapped lower, they brought it back up to center, and they kept it right there for the entire day. So I'm sure market makers did what they needed to do to, CYA on their Thursday trades, if you know what that means. Cover your ass. I think they did that. But from the day's perspective, kind of the neutral, like fresh day, clean slate, they failed 2 days in a row. But like I said, even with all the crazy volatility, we still had winners on Thursday, winners on Friday. I'm happy. We needed price to get below 67.40. That was the easiest trade. It was a full winner. Okay. All right. So all good. If you were in the trades with me this morning, it would have been basically a wash. After commissions and fees, you're probably up $5. Okay. Totally fine. That's a lot better than having, up to $490 risk on the day with one contract. So I do consider, like, in a 0-day environment, I do consider that a win. Like, break-even days are totally fine because we still win most of our days. So a break-even day when we can have like a defense that works for us or have our net profit on the day, I'm actually totally fine with that. Cool. All right. Wild and crazy stuff. So I'll let you go. We'll come back and do this again next week. So next week, Monday through Friday, daily profit play. A couple more weeks of full trading before we hit the holidays. And I'm curious what the markets look like. Watching price action closely. I'm watching Bitcoin. I'm watching gold. I'm watching everything. Here's gold. Pretty volatile, but turned to the south the last couple of days. Silver, same thing. Silver turned a little bit more violently. I think it's noisy. I think it's a lot of volatility. Bitcoin is just going straight down. Look at the Qs. We're bouncing off of the 50-day moving average. I think that right now, technically, as long as we don't take out with a lot of force, so we don't take out this October 10th candle, then it's just noise. Okay. But I think the market finds a way to maybe stabilize. I think right now the thing the market's worried about the most is that this is flipped into now the Fed is pausing. I don't think it really matters. I think if they pause in December, they're going to freaking cut rates in like January, March next year anyway. I don't know. It's like I can't believe for a second that the Fed is like so blind to everything that's going on. They're not. They're smart people, but it's like if they're just sticking to their academic, lagging data points, we have nothing to go on. So that's the one thing I'm worried about is like if they're just sticking to like academic and lagging data, it's like they're always going to be behind. The Fed is never ahead of anything. They're always reactionary. So all the criticism Jerome Powell is getting, they're always reactionary. No Fed chair has been right. They're always reactionary. But they're in a tough spot right now. We have a softening labor market and we have sticky inflation. So I don't think the Fed has ever really had to deal with that in a big degree. Where it's like, are we on the brink of losing a lot of jobs? Are we in the brink of having hyperinflation? And the Fed's trying to thread the needle, and I don't think they know what the hell they're doing. Or at least it seems like it. And the market's trying to, do all sorts of crazy stuff. And the Fed's like, we'll just do nothing. Deer in the headlights. We'll do nothing. So anyway, we'll see if this pivots. Right now, it's showing that there's no cut expected, but it's a slim majority. So maybe this switches and goes back up to like 60, 65, 7% if they believe that a cut is more likely. If they don't cut and they pause in December, it's fine. I'm curious what that looks like going into the new year. Okay. Minutes on what I know minutes, yes, but no FOMC. I mean, it's minutes. We'll see. We'll see. There's been a lot of Fed talk the last couple of weeks. We don't have any other really data. So Wednesday afternoon minutes, yes. We'll see what the market does. Okay. All right. Hey, it's Friday. Have a good weekend. Let's come back and do this again next week. I'll be live Monday through Friday, daily profit plan. Come join me. If you'd like to join my Telegram, this is where I post most of my alerts and updates for all my classes. So if you're in my services, my general Telegram will show you, hey, update for waterfall income, update for newsbreakers, update for double ups. Daily Profit Play has its own Telegram. Pinch Point has its own Telegram. Project Options Edge has its own Telegram. Okay, the other ones are inside of your classroom, email, SMS, inside your classroom alerts, and those go out in my public Telegram, which is right here. Okay, so if you'd like to join the public Telegram, all are welcome. The daily profit play sessions that I run every single day, all are welcome. Members get the alerts, but you can, be a fly on the wall, be a spectator, soak it all in, have some fun with it. And if you want to trade with me and get the alerts, then get one of my services. All right, here you go. So DP, or this is Chris Pulver Telegram. There's that. And if you want to join me for my daily sessions, live sessions, Monday through Friday, 9 a.m. Eastern time. There's a link to join. Cool. All right, everybody. We did it. We survived the week, made some profits. I'll see you next week. Have a good weekend.